Welcome to my more important analysis videos on Tuesday the 18th of December with me, Richard Perry, market analyst at Hantec Markets. We've got a pretty sort of mixed outlook, but tinged with risk aversion in markets today. The decline on Wall Street has become quite considerable. We saw 2% off yesterday. Again, that's pretty much the second day in a row we've seen sharp declines. You can see that through the S&P 500 here. This is throughout 2018. It's basically hitting the lows of February, and you can see the implications of that. That could be a massive top area if completed. So this is a really significant sort of move that we're seeing through the S&P 500 back to these sort of levels, and what we've got is just generally speaking, really the Treasury yields are falling away. We've got the 10-year Treasury yield back in the low 2.8s. The 2-year Treasury yield actually falling to 3-4 month lows now. So in fact that has slightly steepened the yield curve a shade, not much though, sort of 16 basis points on the 2-10 spread. But the markets will be looking out towards the Federal Reserve on Wednesday, what the Fed is going to do with monetary policy, because it pretty much, according to Eurodollar futures, markets are seemingly daring the Fed to sort of pushing the Fed into a decision, really, and a decision they probably don't really want to make, in the fact that risk appetite has plummeted and outlook for further rate hikes next year has fallen so far that markets are actually basically just pricing in maybe even no rate hikes next year after tomorrow's rate hike that is still likely by the Fed. So markets are pretty much responding to this, and how the dollar moves is going to be interesting. The dollar's sort of fluctuated around in recent weeks, but it again is putting pressure on the uptrend channel that it's been in for the past sort of 3 months or so. And it'll be a very interesting Fed meeting, I think, tomorrow. But for now, risk appetite is negative. You've seen a sharp increase again in volatility on the VIX. That doesn't bode well for equities, and you've seen European equities sort of FTSE and CAC all both down. DAX a little bit less, a little bit sort of stable, I suppose, to an extent, but you can see through the yen strength, which is pulling back towards key support areas. You can see the gold price that's pushing back towards 1250 again. And look at this, the oil price. This is a key move to the downside. We've seen that consolidation in recent weeks as OPEC looked to cut production levels. Well, we've seen that smashed to the downside as the demand-driven move to the downside has again set in. That is another key breakdown on oil. So some really important moves that we are seeing on markets at the moment. Now, in terms of data points today, we've had the German IFO data, which was disappointing again, lowest since October 2012 on the IFO business climate. And then we're looking out for housing starts in the US. Now, housing, the NAHB house price index yesterday came in disappointingly again, and sets us up for building permits today. I don't know whether that's going to hold up. It could suggest that building permit numbers are going to be dropping as well, so watch out for that at 1:30 this afternoon. But that was the only real data point today. So my chart of the day is Aussie yen. Now this is a very good depiction of risk appetite. You can see Aussie is a risk-on currency, the yen is a risk-off currency, subsequently Aussie yen falling is risk-off. Now we've seen that Aussie yen closed at a multi-week low yesterday, and is now looking to test that 80.70 support of December, but 80.50 is an old sort of pivot area over the recent over 2018 really, so that could be now coming back towards a test of that and a breakdown below that, and you're looking back below 80 and maybe towards below 79 again. You look at the momentum indicators, they're accelerating lower. MACD lines already calling for a breakdown, as are the RSI, and the stochastics looking negative. So this is beginning to increase to the downside momentum on this Aussie yen. Now in terms of the hourly chart, you can see lower highs, lower lows forming. Classic negative configuration, 50 on the RSI where we're failing, underneath neutral on the hourly MACD lines. Rallies are being sold into 81.20 initial resistance. That was initially supported, broke down, becomes resistance. So yeah, retest of the recent low at 80.70 But 80.50 is that pivot, and a close below that, and you really are sort of gathering momentum for a correction to the downside. So I wish you good luck in your trading today, and I'll speak to you later.